Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is a series where we decode and analyze Nifty on multiple time frames so that we can trade Nifty the next following day with much more confidence and clarity. And while we are planning our trades, what we also try to do is learn and understand key price action concepts like market structure and how I look at the price and how I build a story around the price action so that we are much more ready to take the particular trades, and then we can have a good profitable trading setups, right? So on that note, we'll start with today's session. Just a quick heads up in case if you guys like my videos, like the video, subscribe to the channel, share it with your trading friends and community, and also put down anything that you might have to say in the comments box. All right. And I am traveling to Japan around the end of this month, 29th of May to be specific, for around 2 weeks, during which time I will try to post these daily analysis videos, but it might not be possible for me because I will be with my family vacationing. So what I'll try to do in that case is I'll try to record the videos directly on my mobile and upload it on in a short format, not in this particular long format videos that I usually do, but in a shorter format on my X account and my Instagram account. So the link for those accounts are in the description of this video as well as in the bio of the channel. Please go across and follow the channels as well so that you guys stay updated. So far, I haven't missed out any single day from the time that I've started posting videos on this channel. I'll try to maintain that, but I cannot promise anything. So let's keep our fingers crossed. And on that note, let's just start with what we had planned yesterday versus how it played out in the market today. Right. So yesterday, what we had planned was the first plan, which was there of market opening flat or gap down, forming a negative candle. The high of the negative candle gets taken out. We get a move on the upside. That did not happen because market opened with a gap up. Now, what I had also told was market if market opens gap up area anywhere around this area, it will be a volatile area, and we should not look at creating any fresh new trades. The second setup which was there was a day low breakdown, which was the previous day's low, which when broken down, we could look at a short trade with a pullback. Now, once the market opened with a gap up, immediately went into some sell down, took a support from around previous day's low, gave a small bounce, broke the previous day's low, and this is where we get ready for our trade because this is exactly happening like we had planned. Now, all we needed was a pullback, right? The pullback did come in around this way, and the right entry would have been there's nothing right or wrong, but then the entry as per the plan would have been around here when this low gets taken out with the SL around here. But what I also observed in the market was a trend line in a triangle formation, which was around here, a trend line coming in from top, a trend line connecting these two bottom from the these two lows from the bottom. And once this particular it broke down from this particular triangle, also it was below the previous day's low. The market structure which was established was of a bearish territory on an intraday format. The on an intraday time period, the market structure is of a lower high and lower low, and that is where I wanted to take a short trade around these levels. But all I needed was a pullback, which came in the form of this particular uh, green hammer candle. So this is a very positive candle, broke the low of this quarter candle, but then again went up and closed near the highs. And as soon as the low of this candle was taken out around in this candle, I entered the short trade with my SL just above this particular candle high. Market gave a move on the downside, gave a small pullback, again came here, consolidated for some time, gave a very good move. Now, once this particular swing was created, I moved my SL from here to this particular point on the spot price, right? Once this low was taken out and these three candles, now what I'm trying to explain to you guys here is the trailing method that I use today for today's trade, right? These three are big range, big body candles compared to what was the average size of the candles in Nifty and that what you see on a daily format. So once this particular candle was closed, I put my stop loss above this candle. Once this candle was closed, I trailed my SL above this candle. Once this candle was closed, I trailed my SL above this candle, which which was very close to getting triggered around here, but that did not. And the trend continued on the downside, and I held on to my trade. I exited my trade around 225 something. Yeah, around this time. only because I had to move out of the office for some work, and I was in good profit, so I exited the trade and I moved out. Now, another key element to focus around here is this was our support zone, right? This was nothing but the zero point 0.5 to 0.618 Fibonacci retracement zone, which was there that we had drawn from the of the previous move up move which was there. And this is some a place where we expected the markets to take some support. And when we are in a short trade, because we were any which was expecting a retracement, do we book our profits as soon as the market hits our support zone, or do we take a long trade because it has come to our support zone? No, absolutely not. We are in a trade and we are already trailing our stop losses. We should stick to that trade, and any exit should have been based on a uh, positive price action, or the price actually taking support from this zone, right? So this is a support zone. As per my analysis, the market might respect it, the market might not respect it. Let the markets commit to you before you commit to the market, right? So anybody who would have blindly created any long thinking that markets are at a good support zone around here would have been trapped brutally, right? So price action trading is something wherein the primary and the first focus of your trading should be price, right? You follow the price. Around here, the market was trying to make a double bottom here, taking support. So in case, say, for example, this low was not taken out, or even if after this low was taken out, that is a liquidities move, and this high would have been taken out, I would have exited my short trade around here. Whether I would have taken a long trade or not would depend on the further following price action. But I would have exited the short trade around here. That means my trade would have hit the trailing stop loss. Okay. But I did not exit it just because it has come down to a important support level. The support level holds valid only if the price action around that level shows some sign of bullishness or some buying which is coming in from that particular zone, right? So in this case, our support zone was not respected. I'll just delete it from the time being for the from the charts, right? And on the daily time frame, what I had explained to you guys yesterday about the kind of reversal pattern that I look at. So once the market is in an established uptrend, uh, on a daily time frame, I look for a candle which the high is lower than the previous high, the low is lower than the previous low, and the closing is below the previous low. This is what I had explained to you yesterday, and that it was such a candle which has formed yesterday, and we can look at some profit booking or retracement from around these levels. And what has happened today is a very good, strong bearish candle which has given a follow through of the bearish reversal candle that we saw yesterday. Although we are still trading in a bullish territory, we are still not extremely short, but that does not mean that we'll not be looking at short side trades. Just like today, we captured a good trade on the short side. So that is something that should be in our plan of action for tomorrow as well. So this was the only trade that I had taken for today. For tomorrow, we will keep the plan of action again extremely simple. I'll just delete this particular low, which does not hold any value for us any longer, right? We will again mark today's low. Now try to understand the psyche of traders. Market is nothing. The moves which come in the market is nothing but a mix of the greed and the fear of different traders which are there. And the outcome is the price action which forms on the charts, right? Now, this particular big red candle shows some good bearishness on the daily time frame. Now, there would be many traders who would not have participated in this move, thinking that the market is in an uptrend right now and we will only trade long side trades. Those are the people who take only biased trades, right? They form a bias and then they take trades only on that particular side if their setup forms or anything. But seeing the post-market analysis, seeing this particular candle, they would have a major fear of missing out, or FOMO, as you call it. And that is the case which I discussed in the first scenario yesterday, and that holds true for us for tomorrow as well. So there will be a lot of people who would have missed out on this rally, and out of FOMO, once the market breaks this particular low, they will jump into short side trades. So my first setup for tomorrow will be the market opens flat with a little gap down, something, and forms a bearish candle while breaking previous day's low. And once the high of this candle gets taken out, we can plan a trade on the long side. Now here we do not need to wait for a pullback. In case the pullback, in case the stop loss becomes very big, the logical stop loss becomes very big, what you can do is mark the high of the candle on a 5 minute time frame, and then jump to the 1 minute time frame for the entry with some retracement or halt candles which are there, so that you can get those required pullbacks as well. But once there are some candles like this, in case the open equals to high around here, market breaks this low and then this high gets taken out, you can see a good move on the upside from the market, and that is something which will be my first plan of action for tomorrow. The market, again, in case of this does not happen, market has plans to go down. The plan of action remains the same. We wait for previous day's low to be taken out. We wait for a pullback, and once this low gets taken out, we plan a short trade. Now, once again, we are in a short trade. We see a previously marked support area around here, and this support area is nothing but the gap border which was there on this particular gap that was created in the Indian markets on the ceasefire news, which was on the over the weekend, which was created. So again, the same rules that we had used, the market, if we take a short trade, market comes down around here, does not mean we exit. We hold on to our trades as per our trailing methods, and we will wait for some positive price action for us to move out of the trade or to create a long side trade. That is something that we will plan as and when that happens. And for any long side trade, say, for example, what we can do is we will connect this high with today's low, and once again we will mark this particular zone 0.5 to 0.618 in case the market structure has to change on a smaller time frame, not on daily time frame, but on a 4 hour, hourly, 75 minutes time frame. We can look at market taking in some resistance from these levels. So in case market opens with a gap up, it will create some volatility around these levels, and we can look at creating a short in the market around these levels based on price action. Say, for example, market creates any double top pattern around here, we can again create a short trade over here with day's low as the first target, right? And any long trade that we will plan will be, sorry, I'll just delete this. Sorry for that. Any long trade for us should be only and only after the breakout of this particular Fibonacci zone for us, again with a pullback. So this will be the simple plan of action for tomorrow. We have explained and tried to understand a couple of scenarios, which is the first scenario being the same as the first setup that we discussed yesterday, with the day's low being taken out with a bearish candle. The high of the bearish candle gets taken out. We can expect a up move. And this up move also, again, we should keep this particular zone as the first target. But again, price action is supreme. Please only focus on the price action and take your trades accordingly. The second trade would be this. The third trade is in case of a gap up and we see some price action on these area with which is a double top or anything which is formed around here, and we can take a short trade. And a long trade should be initiated only above this particular zone once it gets taken out with a pullback. So this will be the sweet, simple plan for tomorrow. I hope I am adding some value to your trading. So I would love to have your love back in form of likes, comments, and subscriptions. So keep them coming in. And I'll see you guys again tomorrow post the market. Another word of caution, tomorrow is Wednesday, expiry minus 1 day. Uh, I will shift my trading to next week options, which is the May end options, and that would be my sincere suggestion to you guys as well. Anybody who is trading Nifty uh, and is into option buying and expiry minus 1 day, please shift to the next week's option. You might be paying a slightly premium option prices for your entries, but that is to safeguard your capital in a much more better way. So that is a practice which I follow. There's no rule as such, but that is something which I personally follow. I'll just make this candle a little bit more like, yeah. So that is something which I follow, and that is my suggestion to all my followers. So that's it from my side for today. This is your Nifty Guy signing off. I'll see you guys again tomorrow. Have a good day. Thank you so much.